2025, global financial history will witness a phenomenon not seen since the modern monetary system was formed after World War II. A giant economic alliance, BRICS, representing more than 40% of the world's population and a third of global GDP, is quietly doing something that will make the whole market shudder. Buying gold at the fastest rate in the past 55 years, according to official data from the World Gold Council. This is not a few tons of gold. This is not a normal central bank reserve strategy. This is a comprehensive gold buying campaign spanning from Asia, the Middle East, to South America, creating a wave of asset displacement that experts have called the quietest financial power reset of the 21st century. While the G7 has reduced the proportion of gold in its holdings to prioritize bonds, stocks, and financial assets, BRICS Is has gone against the flow. They are buying so much that they will account for more than 60% of global central bank gold purchases in 2023-2024. China has increased its gold reserves for 18 consecutive months. India has increased the share of gold in its foreign exchange reserves. UAE and Saudi Arabia have become the largest physical gold trading centers in the Gulf. Brazil and South Africa are expanding their mining operations. An entire economic bloc is shifting its reserves from paper to real assets. The question is no longer, how much gold are BRICS buying? But what are they preparing for? A financial shock, a new common currency based on gold, or a new economic order that does not revolve around the USD? And most importantly, what will this change mean for the rest of the world? Why is it so expensive? But the most important question right now is not how much gold BRICS are buying. What has the financial markets, the IMF, the BS, Wall Street, and investment centers worried is, why are they buying? Why now? And why so much? In a world that is rushing into the future at an unprecedented speed, cryptocurrencies, AI, blockchain, CBDCs, cross-border payments using technology, BRICS have chosen something that seems obsolete: gold. A heavy object, difficult to transport, not digitizable, not yielding interest. A metal born from a stellar explosion billions of years ago. An asset older than the concepts of state or bank. So, what is going on? Theory 1 in BRICS are quietly building a new common currency. At the BRICS 2023 and 2024 summits, many leaders mentioned currency backed by real assets, a payment unit backed by real assets, especially gold and commodities. This is not a rumor. This is public content in the meeting minutes. If BRICS creates a gold-backed currency, it means they want to build a payment system that is not dependent on the USD, reduce the risk of sanctions, reduce volatility from Western sovereign debt, and restructure the global trade order. Hypothesis 2: are they preparing for a major global economic downturn? Global sovereign debt exceeds 300,000 billion USD. High interest rates persist. Risk of default in emerging markets. Strong USD puts pressure on foreign exchange reserves. Geopolitical shocks from the Middle East to Europe continue to appear. For BRICS, where many countries have a history of financial instability, gold is the last line of defense against crisis. Hypothesis 30. Is this a strategy to reduce the power of the USD? Over 80% of international trade still uses USD. The USD helps the US borrow cheaply, print money without permission, and control the global payment system. An economic bloc like BRICS, which accounts for the majority of oil, metals, and agricultural products, certainly wants a tool to reduce dependence on the USD, expand intra-bloc payments, and regain financial autonomy from the very beginning. BRICS was more than just a group of emerging countries. They were a natural reaction to a global financial order where the USD held absolute power. Goldman Sachs named them in 2001, but it was not until 2 decades later when Saudi Arabia, the UAE, Egypt, Ethiopia, and Iran began to join that BRICS truly became a geo-economic bloc capable of changing the balance of power. They differ in population, culture, political model, but they have one thing in common: they do not want to live forever in a world where the US holds unlimited monetary power. And here is the most interesting part: BRICS are using the same weapon that the US used to become a superpower: gold. Few people remember that the US only really stepped up to the height of its power after the Bretton Woods Agreement of 1944. When the USD was pegged to gold and the whole world was forced to hold USD reserves because it could be exchanged for gold in the US reserves. The US built its financial power not through military power, not through technology, but through its belief in the gold behind the greenback. In other words, the US once dominated the world with an indirect gold standard, USD gold. When the US abandoned the gold standard in 1971, the USD's power remained because the whole world was forced to depend on the system they built. And now, BRICS is implementing version 2.0 of that strategy. They cannot print money like the US. They do not have a global currency. They cannot force the world to use their own currency. But they can do what the US did. Base their system on gold, a real asset no one controls, no country can print. From 2022 to 2025, as the world is in turmoil over conflicts, public debt and inflation, BRICS will turn to a strategy of hard assets. Oil, gas, metals, rare minerals, and especially gold, which has existed for 4.6 billion years and will never become IU. Financial history always repeats itself. When a monetary system is shaking, countries that want to stand firm will turn to the only thing that no one trusts: gold. America used gold to build its empire. Today, BRICS is using the same trick, but with the opposite goal: to reduce dependence on America and build a new financial order based on real assets. From a purely scientific perspective, gold is almost the perfect material to underpin a financial system, and the reason has nothing to do with sentiment or tradition, but rather with the irreplaceable physical properties of the metal itself. Gold does not oxidize, does not rust, does not corrode with air, seawater, or time, allowing it to remain intact for thousands of years, something no other major metal can do. With a density of 19 gcm, gold can pack a huge amount of value into a very small volume. A 12.5 kg bar the size of a book can contain hundreds of thousands of dollars in value. Gold is also absolutely homogeneous. An ounce of gold in Brazil is identical to an ounce of gold in the UAE or India, making it the global standard for trade. More importantly, gold is easy to verify using scales, spectroscopy, or XRF analyzers, no blockchain, server, or digital infrastructure required. It has existed throughout every technological era, from the Stone Age to the AI era. So when BRICS talked about real asset, backed payment units, they didn't choose oil. Volatile, they didn't choose gas. Hard to store, they didn't choose factories. Hard to standardize. They chose gold, the only asset on the planet that can't be hacked, can't be printed, can't be bankrupted. BRICS is reshaping the entire global gold supply-demand balance in what market experts call the most powerful yet silent shift in half a century. And the reason lies in the bloc's control of almost every important link in the gold value chain. China is the world's #1 gold producer with stable and continuously expanding output. South Africa is the historic land of the world's largest gold mines. Brazil holds huge untapped natural gold reserves. UAE and Saudi Arabia act as physical gold trading centers, where gold from Africa, Asia, and the Middle East is refined, re-exported, and circulated. And India is the second largest gold consumer market on the planet, where gold is not only an asset, but also a cultural tradition that has been ingrained for thousands of years. Because of these strategic positions, in the period 2022-2024, according to the World Gold Council, 8 of the 10 countries that buy the most gold in the world are BRICS or BRICS, creating a huge attraction that causes the flow of physical gold to be drawn to the East and the Southern Hemisphere, while the West, especially the G7 countries, reduces the proportion of gold to prioritize bonds and financial assets. As a result, the global gold price continuously sets records, from $2,300 in 2023 to $2,400 to $500 in 2024, and many forecasts from large organizations such as UBS, Goldman Sachs, or ANZ all believe that gold could approach $3,000 in the period 2025-2026 if BRICS continues this large-scale gold accumulation strategy. But the shift is much more complex when looking at international trade and payment flows. The partial de-dollarization of Saudi Arabia and China in oil trade, or the fact that India and the UAE pay in rupees and dirhams for billions of dollars in bilateral trade, is clear evidence that BRICS wants to reduce their dependence on the dollar in strategic transactions. The more intra-regional trade is conducted in local currencies, the more BRICS are motivated to accumulate gold to create a super, safe asset class that buffers the value of each individual currency. In the context of global public debt exceeding 300,000 billion USD, according to the IMF, and the international financial system facing persistently high interest rates, default risks, and geopolitical volatility, BRICS see gold as an asset that is not only a shelter, but also a backbone reserve, helping them not to be caught up in credit shocks, not tied to US monetary policy, and not vulnerable to strong USD fluctuations. The BRICS accumulation of gold at this rate is therefore not simply an act of hoarding. It is a statement that in a world drifting into a cycle of deep instability, emerging economies want to build for themselves a safe haven system based on real assets, where gold becomes a solid foundation for them to move into a new economic order that is more independent, less dependent, and more autonomous from the rest of the world. In the modern BRICS financial system, gold is no longer a precious metal to be kept in a safe, but has become a strategic component at the heart of the entire new monetary architecture that the bloc is quietly building. At the policy level, many BRICS central banks have increased the proportion of gold in foreign exchange reserves to 20-30%, significantly higher than before the world's absolute dependence on the USD. This is not to decorate the balance sheet, but to create a stable value base that is not dominated by the US Federal Reserve's interest rates, not erased by global inflation, and not easily blocked by international financial mechanisms. In trade, especially oil, gas and mineral trade commodities in which BRICS accounts for an overwhelming proportion, gold is used as collateral to hedge risks. Balance trade and guarantee payments when countries choose to transact in local currencies instead of USD. This helps BRICS significantly reduce their dependence on the traditional international payment system, where the US dollar dominates almost absolutely. At the socio-political level, gold plays the role of the language of trust. In the context of the world constantly facing inflation, conflicts, debt crises, and financial cycle fluctuations, gold becomes a symbol of stability, something that every country, regardless of political system, religion, or culture, acknowledges and values according to the same standard. Most importantly, gold is the foundation for BRICS' ambition to build a new financial system, from the interbank payment system separated from SESNIFTY, to the idea of unit of account that can be backed by gold, to the expansion of the new development bank, NDB, using more real assets instead of relying on USD bonds. If the USD is a currency based on trust, then BRICS wants to build a model where trust is backed by real assets, of which gold is the strongest pillar. Gold has long been considered the never dead asset, and the reason lies in its neutral nature. Gold does not promise a yield, does not issue dividends, does not multiply like stocks or real estate, but it also does not go bankrupt, does not lose value to zero, is not dependent on any bank or government. In a world constantly experiencing inflation, debt crisis, geopolitical risks, and unpredictable currency cycles, gold has become an important layer of protection. Viewed by both poles of the world, the G7 BRICS as a core asset in national reserves. However, gold is not a perfect asset. It does not generate cash flow. Its price is strongly influenced by market sentiment and can absolutely fall when the economy stabilizes or when central banks sell to balance resources. History shows that gold rises sharply when the world panics, but can go sideways for a long time when risks cool down. So the right way to look at it is, gold is not a get-rich-quick scheme. It is a form of financial insurance, something you want when things get rough. And the BRICS continued buying of gold only reinforces its status as the new standard of trust in an era of increasingly fragile paper assets. From the gold dust created by neutron star collisions billions of years ago, to the gold bars stored in steel bunkers in China, India, Brazil, the UAE, or South Africa today, humanity is witnessing a great cycle return. Gold, once a symbol of antiquity, is quietly moving into the heart of a new financial order, where the major economies of BRICS use it to redefine monetary power, energy trade, and economic autonomy. You may agree or not. You may believe in the US dollar, or you may believe in digital technology. But one thing is undeniable in this uncertain world. Gold has become the common language of trust, something that billions of people on every continent recognize and respect. And now it is time for me to ask you, in this journey to decode the metals that shape global power and currency, what would you like to delve into next? Silver, the industrial brother that determines the future of solar energy. Oil, the strategic lifeblood of BRICS. Or the digital currency war between the two BRICS and G7. Why is it so expensive? If you find this video helpful, don't forget to like, subscribe, and leave a comment on what topic you would like me to cover in the next video. See you next time.